All right, hello and welcome to Camel Finance. I'm your boy Camel, and today I've just got a whole heap of cryptocurrency news to show you. So we're going to go through that. Going to look at a few charts, and there's a little bit on the current banking crisis that very few people seem to know about or understand these days. So without further ado, let's get into it. Old Capo here, adding to his imaginary shorts by the seams of things. So I don't know why this guy needs to continue to brag that he failed math. Remember, the road to hell is paved with positive carry and doubling down. Do not short something with 100x upside potential. This is poor risk management, especially at a time when we are seeing banks all around us collapse. We are seeing increased spot-driven demand for Bitcoin, and you can see here this screams bank run to me. CNBC has reportedly delisted a whole bunch of credit default swap data for 5 big banks, including JP Morgan and Bank of America, as you can see here. Why would they do this? Why are they trying to hide the fact that the likelihood of these major banks defaulting on their loan obligations is going through the roof? At the same time, Binance has just joined the latest on the list of those in the cryptocurrency realm being sued by US regulators. So we've seen the SEC going after all manner of exchanges, all manner of cryptocurrency entities, and now the CFTC is going after Binance over alleged regulatory violations. But you have to admit, it's pretty coincidental that the US government has been attacking crypto like crazy over the past 2 weeks, ever since the banking crisis began. It's almost as if they're scared people might choose Bitcoin over banks. So amidst people fleeing to the safe haven asset that is Bitcoin, amidst all of these bank blowups that we're seeing at the rate of roughly 1 bank per week at the moment, over in China, the banking giants are seeking partnership with Bitcoin and crypto firms in Hong Kong after China's mainland ban. Of course, if these banks do not embrace Bitcoin, they are going to be replaced by it. Under the hood, Bitcoin continues to improve every day. I've been showing over the last few videos that the hash rate is at all-time highs, and now here we sit at 5,600 Bitcoin on the Lightning Network, which is a new all-time high, a fresh all-time high for the public Lightning capacity. And all of this in the face of Kenya signing a deal with Saudi Arabia and the United Arab Emirates to buy oil with Kenyan shillings instead of US dollars. So we're not only seeing the dollar come off, we're not only seeing the dollar and the Dixie break down, but we're seeing even more nations move away from using dollars. The writing has been on the wall for a while for the dollar, but this thing is really starting to accelerate now. We are potentially looking at the fall of the current world reserve currency. In other news, MicroStrategy just bought 6,455 more Bitcoin. This brings their total to 138,955 Bitcoin, which they acquired for just over $4 billion at an average price of $29,817. MicroStrategy also reported that it paid off its $205 million loan from Signature Bank, and it got a 22% discount. So you can see this green dotted line here for Michael Saylor and MicroStrategy, and the price is currently sat just a few $1,000s per coin below Michael Saylor's break-even price. Keep in mind, MicroStrategy now owns 1 out of every 151 Bitcoin that will ever exist. Michael Saylor is about as all-in as any man could possibly be. Just recently, the Bitcoin price action has caused the 2-week Bollinger Band percent indicator to enter the overheat zone. And this tells us 2 things. 1, Bitcoin is in a bull market, as this only occurs in a bull market. And 2, Bitcoin will need to cool down sometime soon, but there's still room for an upside rally. And so before we get into the charts, there's a couple of things I wanted to point out. On Friday, we had the PCE data coming out. So this is consumer spending. We will see how that is looking. And then we're only a couple of weeks away from getting the CPI print. The reason I bring this up is because look at the Trueflation data. Trueflation data currently sits sub 4%. I suspect the US government reported figure will be north of 4%. But imagine the amount of melt-up rally that we will see if we could get such a sharp drop-off in inflation. So it'll be really important to look out to 2 weeks' time when we get this CPI print. It'll be really important to see what the consumer spending is saying on Friday this week, regardless of all the data. One thing I know for sure is you better opt out of this system, and you better do it quickly. Most people don't even realize we are in the middle of a banking crisis. If you do because you're in the cryptocurrency space, you're well ahead of the curve. But just stop someone in the street, ask a friend or family that's not into finance, ask them whether they think they're in a banking crisis, and if they are, then how severe is it? And what you'll find out very quickly is nobody even is aware of this yet. But make no mistake about it, this is not up for debate. On March 10th, a bank with $200 billion in assets went to zero overnight. Since then, every single one of these things has happened. An emergency Sunday Fed print for domestic banks. $2 trillion estimate of amount to be printed. $18 trillion estimate of amount to back all the deposits. 186 banks reported similarly insolvent. We had $500 billion wired from banks seeking safe havens. 150 billion plus in discount window, which is more than 2008. We had around 400 billion printed in days, reversing a whole year of QT in just 2 weeks. Then we had an emergency Sunday Fed print for foreign banks. Joint Sunday statements saying the US banks are resilient. 5 dead banks, including too big to fail Credit Suisse. There's been rumbles around Deutsche Bank. There's been rumbles around Charles Schwab. We've got an emergency Friday meeting of Yellen and the FSOC. Another statement that the US banks are resilient, and then a statement saying that further actions may be necessary immediately afterwards. And all of this comes against a backdrop for articles and charts from the Fed and the FDIC talking in coded language about how many US banks are insolvent due to a $620 billion plus unrealized losses caused by the Fed's surprise rate hikes. And despite all of this and the growing concern, the banking crisis seems to have not broken out in financial news. Arguably, this is intentionally being downplayed outside of the space where it can't be ignored. Remember, we haven't seen any White House tweets on the banking crisis. Perhaps they simply don't want to panic anyone by telling them their bank may have a problem. But let's be clear, this is a Western banking crisis. This is not normal. This isn't anyone's hallucination, and reporting on it isn't the same as causing it. So again, you better opt out and you better do it quickly. If you've been watching this channel for a while, if you've been watching this channel of any of my recent videos since this breakout of the yellow horizontal line here for Bitcoin, then you'll know that I've been talking about a potential drop into both a half cycle low due around the 9th of April and a back test of this yellow horizontal line. So is that what's playing out? Is it going to come down this deep? Are we even going to wick this on a low time frame before then recovering and moving our way up into that next daily cycle low? That is my expectation. Whether we wick it or not, I don't know. Whether we retest it or not, I don't know. But so far, can't say I'm surprised by the action. Probably going to set some kind of trend line, do something like this, and then break out and target the next daily cycle low, which I believe will be significantly higher than where we are now. Ethereum, looks like we're going to have to pay a stop on Ethereum. So if we do, that's fine. I'm completely over this coin, to be honest. I have no time or respect for the Ethereum network anymore these days. So anyway, if we're going to get stopped, we're going to get stopped. I will let the stop do the worrying. XRP, flying, as you can see. So looking to take out that local high. Can we do it? Does Price know something here about the SEC versus Ripple lawsuit? That is, of course, to be determined, but so far, I like what I see out of XRP. I also like what I see out of the dollar, as you can see, continues to be contained underneath this downward sloping red resistance line, so therefore, we should be looking for lower lows in the short term. Of course, a daily close above this downward sloping red resistance line would signal that perhaps there's more underlying strength to this move than people gave it credit for, or at least I have been giving it credit for. US 10-year yield attempting this counter trend bounce that I mentioned before then rolling over. So that is to be determined. And the same is of course true of the US 2-year yield. Undeniably no, the trend is down. TLT, for now, still sideways, but this is starting to look heavy. We've had multiple attempts to get above here and we just haven't done it. So I guess the next question is, does the recent lows, do these lows here and here hold for support as we come down to test them again? The S&P 500 continues to trade very nicely, very technically, continues to respect this downward sloping purple resistance line. So whenever it eventually breaks this, I believe this is going to be a very, very significant and powerful upside move. As I keep saying over and over again, we likely have to be open to a drop into this cycle low before then we can think about moving higher. NASDAQ speaks to rounding perhaps here, a couple of rejections of this local high, get above that yellow horizontal line and things get very, very bullish very quickly for tech. But we also have to be open to some kind of pullback in the short term. Dow Jones putting in one of these big wedges. So can it break out here? Can that trigger the long? Hasn't done it yet, but of course, open to all outcomes. Russell 2K still hanging out in no man's land. So we'll see how that goes. And the FTSE 100, again, still hanging out in no man's land. Want to see something like this and then a breakout. And then we can entertain going long for the FTSE 100. The VIX still seem kind of contained, not really sure the validity of this downward sloping red resistance line at this moment in time. It connects these highs, as you can see back here. But for now, we're not really spiking, so can't complain. Just looking for this to continue to compress into the teens. Gold looks to be putting in some kind of decline into a daily cycle low here. So I haven't marked these cycle lows for a while. They got a bit skewed. So we'll be looking to see if we can get a second cycle low show up somewhere in this neighborhood. I'll say this right now so we're clear. If we're going to get a daily cycle low show up, I would like to see, where can I draw it? I'll draw it here. I'd like to see a decline and then quick bounce up and 1 second decline that undercuts the first low, and that is where we'll be looking to get in on a swing low and target a full daily cycle ahead for gold. So we'll see if we can do that. We'll see if we can combine it with some kind of trend line break, something that looks like this. But I do think for now this is likely going to resolve to the downside. So we'll see how this goes. Patience, I think, will be rewarded, as I've been saying over and over again for the metals. The exact same is true of silver. Look, perfect move right back up into this range, seemingly being rejected at the moment. So again, if we can get a drop down, we can draw a trend line and buy the break. I think that sets us up for a very, very, very nice move in the metals markets and miners. Forgot to do Tesla. We'll do Tesla because I know some of you like it. I'm noticing we're setting a green trend line here. So multiple options for entries. You could buy a breakout of this trend line, or we could wait for a range breakout at the top of this box. Each to their own. Still kind of neutral as far as I can tell though. And Apple looks to me like I might have had this stop too tight here, but that's okay because I think what we'll do if we do get stopped here, I've checked the futures and this is pulling back a little bit back inside of this range. So if this gets stopped out, that's fine. It's not really unnormal to see price action like this before then breaking out and going. So all we have to do is stay unemotional, stay unbiased, let the stop do the worrying for us. If we have to pay a stop here, we have to pay a stop here. That's exactly what they're for. And then we'll just look to repeat this trade as it comes out. If this setup is to occur, whether we get stopped or not, if it's to come back down and then break out, that time will be a super high probability trade. So that's it from me. That's all I have to say for today. I feel very confident at this moment in time that any dip in cryptocurrency is going to be bought here. Still playing patient, still waiting for the setups to come to me, as you could probably tell. And of course, looking out to Friday for the PCE data. We'll be examining the closes again, as always, over the weekend. But first, we got to get through this week. In the meantime, I hope you're doing well in life. Take care from me. All the best. Cheers. Bye.